everything you ever wanted to know about mortgages right here today on the Central Line Realty Podcast. Welcome to the Central Line Realty Podcast. I'm Jay White. It's our 10th episode, and today is special because I have a guest. Hey, how about that? So if you are going to buy a new home, you're going to have to pay for it. And at Central Line Realty, we like to partner with smart people who are here to help you. So to that end, today I'm joined by Keziah from Fairway Mortgage, and we're going to talk about some ideas around how to buy and pay for your new home. Great to have you here today, Blake. How you doing?
Good. Thanks for having me. Today.
So can you share a little bit about yourself? Tell me about you and how you got here.
Absolutely. So I'm a mortgage loan officer. That's my title that the government has given me. So I help you finance homes. If you come to Jay and you're trying to buy a house, hopefully I'm one of the first stops, one of the first phone calls that you'll make. Because you need to know how much you can qualify for, and you need to know how much you can afford. So ideally, I'm one of the first contacts after you talk to Jay.
So the way I see it, the market we're in right now, we've been in a seller's market for quite some time, and as the market is moving away from that seller's market, and we're starting to see prices maybe flatten out a little bit and interest rates maybe level off and even come down some.
Yeah.
I think that going into 2025, there's going to be more opportunities for buyers. So that's where you come in is the buyer, right? So what kind of advice would you have to that buyer that's starting to either enter the market or get back into the market?
Yeah. Well, the majority of the buyers that I've talked to this past year were first-time home buyers, my age, mid-20s, early 30s. They never bought a house before. They've been fed to be scared of buying houses, of course, and it's a very daunting process. So I would say just do your research. Find out who you're talking to. Find out what lenders that you are shopping around with. Make sure you have somebody that is accessible and reliable. Those are the two things that I will always say. If you're a lender, you need to be accessible and you need to be reliable. But more importantly, as a home buyer, you need to know who you're talking to, and you need to know exactly how much you're going to be spending. Because I can tell you, not all lenders are made the same. And a lot of lenders are going to trick you up front and need to know exactly what you're looking at when you get quotes from these lenders.
So if I send a buyer over to see you, what's the first question you're going to ask them?
Well, it's honestly a conversation. It's about affordability up front, right? It's how much do you want to spend per month, and how much are you comfortable bringing out of pocket? Because that's the two biggest things in a transaction is when you close up, what is that monthly payment going to be, and how much cash out of your pocket are you going to have to spend? Those are the two main things that any buyer is really worried about. So that's where my conversation lies around. And it doesn't skew too far off of that. A lot of people are worried about interest rates. Mm-hmm. They're worried about fees, and rightly so. But at the end of the day, it all falls down to the monthly payment and the cash to close. And those two numbers are always the most important. And of course, we talk about, comfortability. Where are you comfortable as a home buyer? Where do you want to, where do you see yourself in all the different products that we have out there? That all falls into line as well. But again, the two major things are always payment and cash to close.
So when you say products, like as a loan officer or as a mortgage broker, what does that mean, like a product? What would an example of a product be? So
we have all types of different loans, right? So we have loans for first-time home buyers. We have down payment assistant products that are very, very popular. We have, FHA loans. We have doctor loans. We have different HELOCs, lines of credit for your house, all types of different products. And a lot of them are geared towards what you want your monthly payment to be and how much you have to come out of pocket with.
So let's kind of focus on that first-time home buyer. Mm-hmm. So like you're describing someone your age, maybe a new baby.
Yeah.
And it's time to move out of the apartment and go buy their first home. Mm-hmm. And what should they be doing to get ready for that? I mean, like now, how far out should they plan ahead?
I think any home buyer should be thinking at least 6 months in advance.
Okay.
I think 6 months is a nice happy medium. If you come to me and you say you're 6 months out, the first thing I'm talking about is credit. And credit is a big piece. of the process, because the credit opens up the doors to different loan products, right? And with down payment assistance in general, you need at least a 640 credit score.
Okay.
Right? So my first question to a home buyer, and they say, hey, it's my first time buying a house, and I'm looking to get some down payment assistance. My first question is, hey, what do you think your credit is, right? Because that opens up a can of worms that most home buyers aren't really ready to talk about, right? So if you come to me and you say your credit is a 640, well, I'm going to ask first, where do you get that information from?
Right.
And you know, where do we want to be? You know, what product are we looking for? So then if the credit isn't where need it to be right then we'll start to look at some credit repair. That's where we want to be 6 months out. So that way we have some time to do some credit repair if we need to, or, you know, save up money, some of the other parts of the process as well.
So you used a term like credit repair. Mm-hmm. So to me, if you use the word repair, that would be like something's broken, right?
Yeah.
So talk to me about what does credit repair, what does that look like? So
it depends on what product you want to shoot for. You know, if it's down payment assistance and you need to be at that 640, if you come to me and I pull your credit, and it's a 580. Mm-hmm. So I'm going to take that credit report and then I'm going to put it into our credit simulator. It's this software that Fairway gives us, and it'll tell me exactly what we need to do to get your credit to that 640 or higher, in that timeline that you've given us, right? So if we say we need to be at a 640 within 6 months, and it'll say, okay, well, you know, Jay, you need to pay off these 2 credit cards, and they need to stay at this balance for the next 6 months. So that means that day you go pay those credit cards down to whatever that balance will be. It might be $0. It might be $10. You know, that's a whole nother conversation that we can have. Right. Because I can honestly talk about credit for hours, but it'll tell us exactly where what you need to pay those cards down to and how long they need to sit at that balance for you to get to that 640.
So it sounds to me like that you need to be pretty honest with your loan officer.
Yeah, we're going to find out one way or another. It's funny because I'm always the one that has to have the tough conversations with people when it comes to finances, and honestly, you have to be honest and you have to set expectations up front. And that's kind of what you're going to get with us and with Fairway in general. I
ask people a lot of times, they'll say, because you know we kind of get to know our clients before we send them off to you. And I'll ask them sort of that question, how's your credit? And I said, well, it's pretty good. And I said, do you think it's good or do you know it's good? And, you know, what you think it is and what it is might be different.
Yeah, there's a lot of different websites that'll give you very varying information, right? And it all depends. And honestly, I'm still a little fuzzy on what score from the credit bureaus we use. I've heard things tossed around like your FICO 4, your FICO 8. I didn't know there were different FICO scores.
There's a lot of them, yeah, right.
Yes, but yeah, so that will definitely change depending on, you know, where you're getting your information. There's a lot of accurate places out there as well, but a lot more inaccurate.
So even if I'm a new home buyer and I know that I have some credit issues going into it, it would be better to go ahead and reach out to you and get started on doing credit repair than just to wait, you know, on my own out there, right?
And it's a lot better than going out and spending thousands of dollars with somebody that, honestly, if you go to a credit repair company, their best interest is to keep you, you know, longer with worse credit. So, and I know a lot of other mortgage companies have these tools out there. So if you are looking to buy a house and you have bad credit, just talk to your mortgage person first, because more than likely they have the tools that can get you to where you need to be.
So we talked about earlier a little bit about interest rates. Maybe, you know, they've kind of, it depends on how old you are if you think they're high, right? So like to me, a 7% interest rate is not that high, but if you're younger and you remember 3% interest rates, it seems high. So I think what I understand is that they're probably going to sort of level out, maybe even come down. Do you think that's the case?
It depends on who you talk to.
Yeah, I guess it does.
It depends on where they land. a lot of times in who they trust, right? But there's no telling what the rates are going to do. I think a lot of it will depend on how the market reacts to one with this election that just happened. That changed everything.
Yeah, it always does.
Yeah, and that always it makes the market so volatile. Right after the election was finished, rates got really good, and then they got really bad the next day.
Yeah.
So there's no rhyme or reason why they're going to change. But all I can say is, I have this conversation with my buyers all the time. Is once we go into contract, you have to lock your rate in, pretty soon. And we usually look to lock it in right around the 30-day mark, because that's the average rate lock price is a 30-day rate lock. And when we're right around that timeline, I'm saying, hey, are you comfortable here? Because it's really not risk. It's not really not worth the risk of floating your rate and it maybe getting higher before closing, rather than you floating it and then maybe saving $20 a month. Right. It's really not worth it, because eventually the rates are going to come down. That's just how the market works. The rates go up and down, and eventually when they go down, that's when you can get your low rate and save you your monthly payment. But right now, if you're comfortable with this mortgage payment, let's just lock it in and be safe.
So basically, sort of shop the payment.
Right. Yeah. Shop the payment.
Don't get too hung up on the rate as much as what payment it leads to.
Yeah.
And look at that.
And that's how upfront. I said this before. Not every loan officer is built the same, and everybody operates very differently. But the way I handle my customers is I always estimate on the high side up front. I would much rather you, as a home buyer, get a lower monthly payment at closing rather than having a higher one at closing. You'll like me a lot longer that way, right?
Used to say under promise and over deliver.
Exactly.
Right?
Yeah, that's always my motto for home buyers. And a lot of loan officers do things differently, where they'll tell you that you're getting a 6.5 and you'll close with a 6 3/4. So you have to definitely look out for that.
So let's say, and here's something, especially in the economy we've been through for the last few years, is that a lot of new buyers don't have that down payment saved up. So cash has become smaller. People's cash reserves are getting. So if a buyer comes in and they don't have a lot of cash for a down payment, is that something you can work with?
Yeah, absolutely. So there's a program that I've worked with for years now, and I love using it. It's North Carolina Housing Finance Agency. They now have a $15,000 forgivable first-time homebuyer grant.
Okay.
Right. So, and how that works is, you go in to buy a house, you're a first-time home buyer, they'll give you the $15,000, and it acts as a second lien on the property for 15 years. At year 11, 20% of that is forgiven. I don't know what the number is, but at year 15, 100% of it is fully forgiven, right? So the only downside is, if you're within that 15 years and you want to move, you want to, let's say you want to do what a lot of people are doing, you want to buy another house and rent out that current house that you have, you then have to pay back that full $15,000.
But it goes down, the balance goes down over time.
It's starting at year 11, but what's the statistic? Is the average home buyer or the average homeowner?
I think the average mortgage is about 7 years, right? I mean, if they refinance or, it could be in the same house, but
Absolutely.
they refinance, it's a new mortgage.
Yeah, but yeah, that's the only downside to that program. But I've gotten so many home buyers into homes using North Carolina Housing, and the magical thing about that program is they have set interest rates every single day.
Gotcha.
They come out every single day, so no matter what lender is offering it, everybody gets the same one, right? So the fees are the same for everybody. It's it's a really good program, and I like it. And
are the qualifications pretty steep for it, or is that 640 credit score get you there?
640 credit score, debt to income ratio, which again, we can get into more conversations about all that stuff, but debt to income ratio is a little bit lower. So if we're comparing, if I were to pre-approve you on a standard FHA loan and a North Carolina housing loan, the pre-approval might be a little bit lower, just because the the debt to income requirements are a little bit lower, meaning that
When you say pre-approval, you're talking about the amount of the price tag of the house.
Yeah, yeah.
Right?
How much I pre-approve you for.
Right.
Yeah.
And once we have that pre-approval number, then it's time for us realtors to go to work.
Yeah, that's when it's time for you. That's when the magic happens.
Yeah. So once we get that pre-approval number from Blake, then we can go find your house.
Mm-hmm.
Then we put it back in his court. Then we put it back in there to get it finished up. Yeah. And how long does that take? How long does it take from the time we find the house, we negotiate an offer, we go under contract, and then how long does it take you to get that money to the attorney so we can close that loan?
Well, ideally under 30 days. That's kind of the average close time. Mm-hmm. And that's what most of you guys expect from us is at least 30 days.
Well, we expect like 4 days.
Yeah. Well, I can, I can make something close to that happen in a special circumstance,
right.
but legally allowed, we're only allowed 7 days is the government's guidelines from start to finish. But I can comfortably close a loan in 3 to 4 weeks.
Yep.
That's a good expectation to set up front. That gives my team enough time to get everything in through underwriting and all that kind of stuff. If I did my job correctly up front, that process should be very easy.
So I'm just thinking about hiccups along the way.
Oh yeah.
And here's the story of the new home buyer that is going to close next week, and they go out over the weekend to some furniture store, and they open a new line of credit and buy furniture for their new home.
Oh man.
Could that impact the deal?
Yes, and that has happened to me dozens of times.
Right.
Yeah, I've had, and it's so funny, Jay. I've had a real estate agent come to me to buy a house, and they forgot to mention that they bought an RV the week before I pulled their credit. So we get all the way almost to closing, and the underwriter does a soft credit pull towards closing, and they say, "Oh well, there's a $800 and something payment on here. We're done. This is not going to work." So, yeah, that happens all the time where people go out and they make big purchases where, again, the loan officer should advise them up front. And a lot of times you guys do the same thing. I mean, and I got to commend you guys for doing that, but that is something that up front, that's a part of the initial conversation. When I pull credit, I'm like, okay, nothing can change from now on.
Don't do anything without talking to your loan a loan officer.
Yeah. No big purchases, no credit pulls, nothing. Right. Do absolutely nothing. Wait until after you close. It's not worth it. Yeah. It's not worth it.
And it's hard enough to get to that point. You don't want to do anything to jeopardize it once you get there.
Yeah.
So we've talked about credit repair, and we've talked about some down payment assistance. What can you, off the top of your head, think of any other hurdle that someone could overcome before they get to what I'm trying to say? Is there something else somebody can do in that 6-month period?
Yeah.
To get ready before they start the process.
And I mean, honestly, it comes down to that initial conversation. It depends. It depends on where you're trying to be. If you come to me and your credit's good, your income is easy enough to qualify, you have the money for down payment. I mean, honestly, I would write the pre-approval then, and we would just wait. But if your credit's challenged, we're going to work on credit. I'm going to follow up with you every single month, every other week. Make sure you're doing what we planned on doing, making sure you're on track to hit that goal. Right. And the same thing with, if you need down payment money, we'll have that conversation about what is it that you need, right? Because we have all of the products that are going to help you. It's more or less just going to come down to comfortability for the home buyer. So at the end of the day, everybody's situation is different. So it probably didn't answer your question, but
well, it kind of did.
But everybody's situation is different, right. And that's just how we have to treat it. Right. We have to go into everything with a tailored fit, right? Everybody needs different things, right? So somebody might need an FHA loan, somebody might need like a conventional loan or something. I mean, those are all different varying products for different needs.
If someone wants to get a hold of you, how's the best way to reach Blake? Obviously, you go to centrallinerealty.com and let us hook you up. Mm-hmm. But if you want to get a head start and you want to talk to Blake, how's the best way for somebody to, and I'm sure we can put a link somewhere in this thing where they can.
Yeah, the best way to get a hold of me is just by phone. It's 704-816-9307. Just call Jay, honestly.
That's the best way.
Or you could go to my website and apply. It's just lakenormanfairway.com. Very easy.
Can they
very
scan
simple.
that QR code
Yeah,
that's on your
absolutely.
laptop?
You can actually scan that QR code.
They could zoom in and scan
if it'll
that.
work. I don't even know if it'll work from here. But yeah, you could just do that. That would be a heck of a lot easier. But yeah, always just reach out to me. That's one thing about Fairway that I will say is we have been taught to always be available, be accessible, be reliable, the two biggest things in this business that I've learned. So
Real estate is a 24-hour-a-day business.
Absolutely. Sure. Yep. It starts on Friday.
That's kind of true. Well, I appreciate you coming on today.
Yeah,
I do. I think it's been some good information. If you want to reach out to Blake, we'll leave you some contact information. Obviously, if you're thinking of buying or selling a home, you need to go to centrallinerrealty.com and let us get you started. We are committed to you, and we put you at the center of everything we do. That's Central Liner. We're in the center of North Carolina, and we put you first. CentralLinerRealty.com. Thanks for watching this whole 20-minute video. Isaiah is ecstatic that I made it as long as I did, and I look forward to our next time together. Thanks.
For any questions, you can visit us at CentralLinerRealty.com, email us at CentralLinerRealty@gmail.com, or give us a call at 704-838-6086. Thank you for listening to Central Liner Realty, the podcast.